Hey there, Lincoln here from bullacademy.org. Today I just want to do a quick video on SoFi's lending products and talk about just how amazing it is that the lending products have continued to grow and even faster than ever before in a downturn in the economy, in the markets. We have been going through a bunch of inflation, and the Federal Reserve has been trying to crash the economy so that we can get back down to normal inflation rates at 2%, where we've seen 8%, almost 9%, and now we're trying to get back to that 2% rate where we're probably around 4 to 3% according to last results, and the Fed is slowing down a little bit. But the point is that the market has been going through a bunch of trouble. The economy is struggling because that's the goal of the Federal Reserve. And still, SoFi's lending products are on the rise. People are taking out more loans from SoFi than ever before. And we're going to look at those numbers in a minute and explain why SoFi succeeds no matter what, in good markets and in bad markets, bad economies and good economies. But before we get to that, do me one favor, like this video, subscribe to the channel, and comment your thoughts. That's all I need from you. And actually, no, one more. Share this video with one friend. So I'm looking at SoFi's Q2 earnings report here, and I'm looking at the company's metrics as well as their segment financials. And at these company metrics, what I just noticed was that the Q1 lending products year-over-year growth was 24.4%. I looked back at the previous years, 24.2, 24.2, 22.5, and so on, going down the list all the way to 12.3%. And then I thought, wow, that's amazing. SoFi is doing better this year in lending out money than they ever have. They're growing much faster than they ever have before. And then I saw next to it the Q2 report, which was 25.1% for Q2 of 2023 in the lending segment. SoFi has grown their lending products by 25.1% over the last year during a bad economy. So I always try to explain here why I think that is. And I think it's pretty simple. SoFi has positioned itself in a way that allows it to succeed no matter what the market is. When rates are high, SoFi can still give out loans. When rates are low, SoFi can give out loans. And in fact, when rates are higher, they do better because they are a bank. They get paid interest on those loans. And of course, because they get paid more interest, those loans are worth more, which means they can sell those loans for more to other investors. Or if they hold it for longer, they get more money during the time that they're holding it before they sell it off. And when the market's great, the economy is great, people still need to do stuff. They want to invest. And so they're going to go out and find loans. And if SoFi can offer the best rates because they have their customers giving them $2 billion in deposits increasingly every single quarter, and because they are a online bank and they don't have any physical locations, they're able to take all those cost savings and pass it on to their customers, which means that they'll get more customer satisfaction and of course more word of mouth. And because they also own SoFi Stadium, they get a lot of impressions, and their whole marketing strategy all works. Their customer acquisition strategy funnel works. And I've explained that whole process in a previous video on their financial services productivity loop. Man, that's a mouthful. So if you haven't seen that video, go watch that, because this tells us why SoFi continues to grow even as the market is in a downturn. And so they grew their lending products by 25.1% year over year. That's pretty darn good. If we actually go to the segment financials, we can see that it gets better. Their lending segment has been profitable for as long as we can see, which is 2021, Q1 2021. Back then, they made $87 million in contribution profits on their lending segment. In Q1, they made $209 million in contribution profits in their lending products. Again, that's a 24.4% year-over-year growth in the number of products that they had. But If we look at Q2 of 2023, it of course took a little bit of a dip. That's fine, but it's still higher than Q3 of 2022 and also Q2 of 2022. It's a little bit lower than Q4 of 2022, which is fine. They made $183 million in contribution profits. And that's because, of course, they had more expenses in Q2 of 2023. I'm guessing they had to do more marketing or other reasons. If we look at their technology platform, we see that in Q2 of 2023, they made $17 million in contribution profits from that segment. That's Galileo's Technisys, which means that their lending product still made more than 10 times what the technology platform made, and of course, infinitely more than their loss-leading financial services segment, which is still losing money for the company, $4 million in Q2 of 2023. So I like these results when it comes to SoFi's most profitable unit, right? Because they're a bank. Their most important unit is lending. They take in cash from their customers and they lend out that cash to other people who need money, who want to buy a home with a home mortgage, or improve that home with a personal loan, or go to school with a student loan, or refinance their government student loan or some other student loan with SoFi to get better rates or better terms that they can afford in the current day. So SoFi's whole strategy is working. They acquire their customers using the financial services, which is their high yield savings account, checking accounts, their invest products, and so much more. There's so many options that they provide to their customers. And then with those customers in the house, they upsell them on the loans, and the loans make the bulk of the money. So about 80%, and of course technology makes 20%, whatever the number is over the long term. That's the goal. I'm liking what I'm seeing from the Q2 2023 report on the lending products. And of course, I'm also liking that the financial services segment is nearing contribution profitability. The technology platform, of course, is still growing and is doing pretty well. It took a little bit of a dip, but it's coming back now. And we'll talk about those in another video. If you're interested in all of that, of course, like this video, subscribe to the channel, comment your thoughts, and don't forget to turn on the notification bell so you don't miss my next video. And of course, a big shout out to our patrons at patreon.boacademy.org who support this channel financially. If you want to join us in our Discord channel, that's where you can find us. I'm Lincoln with boacademy.org. Thank you again, and have a great day.